All right, now, no recession. So they say there's no recession. Janet Yellen says we won't see another one in our lifetime. Cardi B says, are you going to say we're in a recession? And Yellen says, no, we're not having one. Okay, well, let's take a look at that. What is a recession? Let's first look at this. What's the definition of the word? Let's make sure that we're all using the same terminology. From Investopedia, a recession is a significant decline in general economic activity. Okay, well, how do you measure that? It's recognized as 2 consecutive quarters. It's 3 months and 3 months. 2 consecutive quarters of economic decline, of GDP going down for 2 quarters, as reflected by what? GDP. All right? That's how you quantify it. So we're on the same page here. Not how it's defined anymore. It says that the 2 consecutive quarters of decline in the real GDP are not how it's defined anymore. Now they define a recession as a significant decline in economic activity spread across the economy lasting more than a few months. So a quarter is 3. So I don't know what a few is. A quarter is 3. 2 quarters would be 6 months. All right. Normally visible in real GDP, real income, employment or unemployment numbers, production, and retail sales. Okay, so let's look at those couple things over the last couple months. Now, right off the bat, we're going to pull up the GDP. So this is the U.S. GDP, gross domestic product. It contracted by 1.6%. That's negative 1.6. That's negative growth. So as you can see in this chart, we had 2020 went negative. Of course, the entire economy was shut down on purpose. It wasn't the pandemic that was the problem, it was the response to the pandemic. And then we had this huge growth because then it opened back up and everything boomed with trillions of dollars dumped into the market. But here we have, it's been slowing, and here we have negative. This is negative growth trending down, okay? Always look at the trend and look at it. So we're negative growth, that's quarter 1. All right, where are we for quarter 2? Well, quarter 2 hasn't officially closed yet. Today it will officially close. But what we can see right here is that the latest estimate is as of June 30th, is a negative 1% GDP growth. All right, so here we have from the Atlanta Fed, this is the GDP now estimate. Here's 0, and here we are well below 0. So that's 2 quarters, 6 months of not slowing GDP as would be defined in a recession, but actually negative GDP. So that's what the quantification of it is. That's the definition. She says we're not having it. Are they lying to you? Let's dig into some more of the numbers. What about the other numbers? They say we have a very strong economy. Let's take a look at this. Now look, this isn't all about doom and gloom. Let me just tell you real quickly, I learned a long time ago in my investing career, there's no such thing as good and bad timing. There's good and bad strategies. All right, so there's always opportunities in every market, but only if you're looking at the real information, the accurate information. And of course, they're lying to you, giving the wrong information. So we're going to look at the real information so you can make the right decisions. There's always opportunity. It's not doom and gloom. Okay, how strong are we? Well, let's take a look at the inflation numbers. So we can see that inflation is a problem, specifically in housing. Now CPI, Consumer Price Index, measures housing. It doesn't measure the price of your home going up. It's a owner's rent equivalent. So looking at the price of the rents. So here we have CPI in it says owner's equivalent rent. And look at the growth of CPI right there. So CPI is the increase of price, and you can see how fast that is shooting up. So that appears to be a problem. As a matter of fact, if we look at rents across the United States, we can see that a monthly look at average rent prices trends in the United States are way up. A 1-bedroom is up an average of 25%. A 2-bedroom is up almost 27%. That's the national average. Some places are up more than 100% on rents. 26% is only the national average. So how is the economy looking? It's not looking so good, is it? As a matter of fact, we can see here, I believe this is from Bloomberg right here. In a recent category, we have this from Bloomberg. About 15% of U.S. renters aren't caught up with their payments. They're not even able to keep up with those payments, but it gets worse. Gets worse this summer as many leases come due and landlords boost prices. So stocks, cryptocurrencies, it's called mark to market. Every single day, every single minute, we know what the price is. The price is always live, right? But with real estate, it's a little bit slower, specifically in rents, because you sign a year lease. When the lease is up, then the landlord can raise the prices. So it has sometimes a year lag. So we're expecting that this summer, as these leases come due, the landlord will boost prices. So we think rent prices are going up high now. 15% of people can't even afford it now. Wait until the price increases go up. That represents 8.4 million Americans who are struggling to pay their monthly rents on time. So again, I'd ask Janet Yellen, I'd ask Jay Powell, so how is that economy doing? It's really strong, right? 15% of renters are on payment. Rents are increasing faster and faster. And by the way, the numbers are completely fudged because the owner's equivalent rent is completely misrepresented. I'm not going to dig super deep into that right now.